We are here at section D, that is cost management, which is 15% of your exam, and we are going to discuss about measurement concepts, that is D1. So let us start with the discussion on measurement concepts. So we are going to start with the cost management concepts and terminologies, which is having 93 MCQs. So let us begin with this lecture 4.02. Now, cost drivers are basically the cost drivers can be anything. It can be an activity, it can be an event, or it can be a volume. But there must be a cause and effect relationship. So, cost drivers are accounting techniques used to control costs. Cost drivers are not accounting techniques used to control costs. Cost drivers are accounting measurements used to evaluate whether or not performance is proceeding according to plan. Cost drivers are not accounting measurements used to evaluate whether or not performance is proceeding according to plan. But cost drivers are the measure of activities. Cost drivers are the measure of activities. So, cost drivers can be a mechanical basis such as machine hours, computer time, size of equipment, or square footage of factory, used to assign cost to activities. Cost drivers can be a mechanical basis, but the most appropriate option is that activities that cause cost to increase as the activity increases. If the activity increases, the cost will increase. So cost drivers can be anything. It's not that it should be a mechanical basis. For example, pension benefits can be employed. For example, pension benefit, it can be an employee salaries. So the cost drivers can be anything. It can be a mechanical basis, but the most appropriate option is that activities that cause cost to increase as the activity increases. So this is the correct option. Next, the allocation of cost to particular cost subject allows a firm to analyze all of the following except. So they are asking for the reason why we allocate the cost. Reason why we allocate the cost. So reasons why we allocate the cost, that whether a particular department should be expanded. This is one of the reasons why we allocate the cost. Whether a product line should be discontinued, this is one of the reasons why we allocate the cost, whether the product line should be discontinued or continued. Why a particular product should be purchased rather than manufactured in-house. This is one of the reasons why we allocate cost. But the allocation of cost to a particular cost subject allows a firm to analyze all of the following except. Why the sales of a particular product have increased. Cost allocation is an internal method that does not affect the demand or the external. That does not affect the demand. That's why this is the incorrect option, but the correct option for this MCQ. Now, next. Costs are allocated to cost objects in many ways and for many reasons. Which one of the following is the purpose of cost allocation? So they are asking which one of the following is the purpose of cost allocation. Evaluating revenue centers' performance. Revenue centers are responsible for revenue only, so no cost is involved. So this is the incorrect option. Budgeting cash and controlling expenditure. The purpose of cost allocation is not budgeting cash and controlling expenditure, and it will not aid in variable costing for internal reporting. But the reason for cost allocation is that we want to measure our income, what is our income and assets for external reporting. This is the correct option for which we allocate cost to cost object. Next. Inventoriable cost. Inventoriable costs are also called as product cost. Product cost and inventoriable cost are direct material, direct labor, and manufacturing overhead. This manufacturing overhead consists of fixed factory overhead and we have variable overhead. So let us see the options. Include only prime cost? No, prime costs are direct material plus direct labor. Here we are missing what? Here we are missing the MOH. Includes only conversion cost. Conversion cost includes direct labor plus MOH. So here we are missing the direct material. So this is incorrect option. This is incorrect option. Our expense when products become part of finished goods inventory. Finished goods inventory are our assets, and in fact they are not expensed. They are capitalized. Now, inventoriable costs are regarded as assets before the products are sold. So this is the correct option, that inventoriable costs are regarded as assets before the products are sold. Next, a cost incurred for the benefit of more than one cost. A cost incurred for the benefit of more than one cost objective is, this is the definition of common cost. So an example of common cost is canteen. Canteen cost is an example of common cost. So a cost incurred for the benefit of more than one cost objective is a common cost. Next, a cost that always can be directly traced to a cost. A cost that always can be directly traced to a cost object. So we have direct material, we have direct labor. They are directly traceable. So manufacturing overhead costs are not directly traceable. Now, a variable overhead is manufacturing overhead. Indirect cost is a manufacturing overhead. Conversion cost includes direct labor plus manufacturing overhead. So it includes indirect costs, directly traceable cost to the end product, or it can be also called as indirect cost. This is direct cost and this is indirect cost. So it can also be called as direct cost and indirect cost. So indirect cost, it's a manufacturing overhead, and we have conversion cost, that is direct labor. Here direct labor is a direct cost and manufacturing overhead is an indirect cost. So the option that is correct is the prime cost, because prime cost includes only direct material plus direct labor, which is the part of direct cost, and that is direct material and direct labor, and that are direct cost. So a cost that always can be directly traced to a cost object is a prime cost. Next. Which one of the following best describes direct labor? What is direct labor? So we have prime cost. Direct labor is not a period cost. So either it's a product cost or it's a prime cost, or it's both a product cost or a prime cost. So let us see what is a product cost. So product cost includes direct material, direct labor, and manufacturing overhead. Prime cost includes direct material plus direct labor. Let us see whether it fits. They are asking for direct labor. So direct labor is a product cost, and direct labor is also a prime cost. So which one of the following best describes direct labor? So direct labor is both a product cost and a prime cost. Next. In cost terminology, conversion cost consists of, conversion cost is direct labor plus manufacturing overhead. So it is direct labor plus factory overhead, which matches with direct labor plus manufacturing overhead, which is option C. Next. Conversion cost do not include. Conversion cost, what is not included in the conversion cost? Conversion cost is direct labor plus manufacturing overhead. So manufacturing overhead consists of fixed overhead and variable overhead. So depreciation is fixed overhead. Direct material, okay. Direct material is okay. The indirect labor is variable overhead, and indirect material is variable overhead. So there is no option for direct material. So direct material is the correct option, because depreciation is fixed overhead, that is comes under manufacturing. Indirect labor is a variable overhead that comes under manufacturing, and indirect material is variable overhead that comes under manufacturing. So the correct option is direct material. Next. Conversion cost pricing. First, let us understand what is conversion cost pricing. Conversion cost pricing is that customers will provide you the material. The customers are going to provide you the material, and the manufacturer will perform the work on it. So let us see. And conversion cost, we have direct material. Conversion cost is direct labor plus MOH. So let us see whether it fits where. Places minimal emphasis on the cost of material used in the manufacturing a product. No direct material in conversion cost. Places heavy emphasis on indirect cost, that is manufacturing overhead. Yes. And disregards the consideration of direct cost. No. Disregards the consideration of direct cost. Then what about the direct labor? Places heavy emphasis on direct cost. Direct cost is direct labor here. Here we have MOH. This indirect cost, they are asking for MOH. Okay. This is direct labor. So places heavy emphasis on direct cost and disregards the consideration of indirect cost. Then what about the manufacturing overhead? Manufacturing overhead is included, because conversion cost includes direct labor plus manufacturing overhead. So the correct option is that conversion cost could be used when the customer furnishes the material used in the manufacturing a product. Next. What the term prime cost? Prime cost is direct material plus direct labor. So let us see whether it fits. So it is the sum of raw material, that is direct material, plus direct labor. So this is the correct option. It is sum of direct labor. Factory overhead is not there in prime cost. All costs manufacture, all costs no. We have only direct material and direct labor. Direct material and we have raw material cost and direct labor cost, yes, but all manufacturing no. Manufacturing costs no. The costs that includes in the prime cost are direct material and we have direct labor. Now next, a company produces 200,000 units of goods that has the following cost. Direct material, this is your DM. Direct manufacturing labor cost, this is your direct labor. And indirect manufacturing cost, this is your MOH. The company per unit prime cost and conversion cost. So let us find the prime cost and conversion cost. So prime cost is direct material plus direct labor, and they are asking per unit basis. Okay, direct material plus direct labor. What is your direct material? We have direct material here, that is 2 million, plus we have direct labor, that is 1 million. So direct material plus direct labor by the number of units, that is 200,000. So you will get per unit prime cost. So per unit prime cost is $15, which says that option D is correct. So let us now find the conversion cost. So conversion cost is direct labor plus manufacturing overhead. Now direct labor is 1 million and manufacturing overhead is 600,000 by 200,000. So the conversion cost comes to $8. So the correct option is D. Now next, estimated unit cost of cold lab using full absorption costing and operating at a production level of 12,000 units. Cost and estimated unit cost. Direct material, this is your DM. Let us mark, this is your DM, this is your DL. Variable manufacturing overhead and fixed manufacturing overhead. Variable selling and fixed selling. This is variable manufacturing overhead is MOH. So your MOH is 21. So let us now find what they are asking for. Cold labs estimated conversion cost. They are asking for conversion cost. So what is conversion cost? Conversion cost is the sum of direct labor plus manufacturing overhead. And direct labor is 20. And manufacturing overhead, which is 21, which gives you 41. Now next, cold labs estimated prime cost. So now they are asking for the prime cost. Prime cost is direct material plus direct labor. So direct material is 32 plus direct labor is 20. So 32 plus 20 is $52. So it's $52. Next, conversion costs are direct material. Conversion cost, they are asking for conversion cost, right? Conversion cost is direct labor plus manufacturing overhead. So manufacturing cost incurred to produce 1 unit of manufacturing cost is included, but we also include direct labor plus all costs associated with manufacturing other than direct labor costs and raw materials We include direct labor plus manufacturing overhead. We don't include raw material cost, but we include direct labor cost and manufacturing cost. The sum of direct labor cost and all factory overhead cost. This is the conversion cost. Conversion costs are direct labor plus manufacturing overhead, and this is the sum of direct labor cost and all factory overhead costs. Sum of raw material and direct labor cost. This is your conversion cost, and the sum of raw materials and direct labor costs are prime cost. Next, which of the following is a period cost rather than a product cost for a manufacturer? So product costs are direct material. We have direct labor and manufacturing overhead. So manufacturing overhead is, we have fixed overhead and variable overhead. Direct material is a product cost. Variable overhead is a product cost. Fixed overhead is a product cost. But abnormal spoilage is not a product cost, it's a period cost. Next. The terms direct cost and indirect cost are commonly used in accounting. A particular cost might be considered a direct cost for a manufacturing department, but an indirect cost of the product produced in the manufacturing department. Classifying a cost as either. So classifying a cost as either direct or indirect depends upon. The terms direct cost and indirect cost are commonly used in accounting. A particular cost might be considered a direct cost of a manufacturing department, but an indirect cost of the product produced in the manufacturing department. Classifying a cost as either direct or indirect depends upon. Let us see. We have a production manager's salary. Production manager's salary. We have production manager's salary. And we have two departments. We have department 1 and we have department 2. Department 2 is the product department, or we can say the manufacturing, we can say the product department. And here we have the production department. The production department's salary is a direct cost for the production department, and for product department like shoes, when you calculate the cost of the shoes, that is production manager's salary. Here it is the indirect cost. So it depends upon the cost objective which the costs are being related to. Because the production managers, we have to develop production manager salary in the production department is a direct cost, but in shoes, if it's a product, that will be classified as indirect cost for that particular department. So it differs about department to department and product versus department. So production manager salaries can be a direct cost for the production department because because his cost can be directly traced to the production department, but indirectly it cannot be traced. So that's why it's an indirect cost. So the correct option for this MCQ is that the cost object to which the cost is being related. C is the correct option. Now, direct labor costs are wages paid to. What are direct labor costs? Direct labor costs are the cost that is identifiable with finished product. So machine operators cost can be identifiable with the finished products. So this is yes. Factory supervisor salary and corporate vice president salary are not identifiable with the production of a specific finished goods. So that's why they are indirect cost. So the correct option is yes, no, and no. Next. A firm manufactures light bulbs. The following salaries were included in the manufacturing costs for the year. We have machine operators, we have factory supervisor, and we have machinery mechanic. What is the amount of direct labor for the year? What is the amount of direct labor? So direct labor is the direct cost. So machine operator is a direct cost, which is direct labor. Machinery supervisor and machinery mechanic, they are not the direct cost, they are indirect cost, and they are not the direct cost because they are indirect cost and they are not identifiable with the specific product. But machine operator's salary is identifiable with the specific product, so that's why that is called as direct cost, and it will be considered as direct labor, which is 145,000 as direct cost. Machine factory supervisors and machine mechanics, it's indirect cost because you can't identify their cost with the specific product. They are not identifiable. Next, production cost for the July are, we have direct material production cost, we have direct labor, and we have MOH. So they are asking what they are asking for. What is the amount of cost traceable to a specific product? The cost that is traceable are direct material and direct labor. So let us find what is direct material and direct labor. So direct material we have 120,000 and direct labor we have 108,000. So together it gives you 228,000. Option B to be the correct option. Next, an example of an operating cost at a hotel that is both direct and fixed. That is both direct and fixed. We need a direct cost and its fixed cost. It's a hotel, not a chain. So water is a variable cost. Toilet tissue is a variable cost. Advertising for a hotel chain, it's not for a particular hotel, it's a hotel chain, so that's why it's an indirect cost. So we are left with manager salary. So a hotel manager is sitting in a hotel, so manager salary is direct cost because it can be traced to that hotel. It is a direct cost plus as well as it is fixed because he get a fixed amount of salary. So option A is the correct option. Next, many companies recognize three major categories of costs of manufacturing a product. These are direct materials, direct labor, and overhead. Which of the following is an overhead cost in the production of automobile? So they are asking for overhead cost, which is manufacturing overhead. So the cost of tires on each automobile. The cost of tires on each automobile is direct material. The cost of laborers who place tires on each automobile. The cost of laborers who place tires on each automobile, this is direct labor. And the delivery cost for the tires on each automobile, the delivery cost for the tires on each automobile is direct material. So we are left with option A. So option A is the correct option because the cost of a small tools, they are very small. That's why you can't trace to the finished product or the end product or the end product. So that's why this can be classified as manufacturing overhead and indirect cost. Next, a company experienced a machinery breakdown on one of its product lines. As a consequence of this breakdown, manufacturing fell behind schedule. A decision was made to schedule overtime to return manufacturing to schedule. Which one of the following methods is the proper way to account for the overtime paid? So they're asking for which one of the following methods is the proper way is the proper way to account for the overtime paid to the direct laborer. So when you are saying the proper way to allocate or the proper way to account for the overtime paid for the direct labor is we have estate time wages into overtime hours that will consider as direct labor. So we have estate time wages into overtime hours that will be considered as direct labor, and overtime hours in multiplied by overtime premium that will be classified as MOH. So that overtime paid to direct laborer, that is, will be split between direct labor and manufacturing overhead. And how it will be split? That estate time wages into overtime hours, that will be direct labor, and overtime hours into overtime premium, that is MOH. So let us say the overtime hours times the sum of estate time wages and overtime premium would be charged entirely to manufacturing overhead. No, we split it. We split between direct labor and MOH, not only charged to manufacturing overhead. The overtime hours times the sum of direct material time wages and overtime premium would be treated as direct labor. No, we split between direct labor and MOH. The overtime hours times the overtime premium would be charged to repair and maintenance expense. There is nothing like repairs and maintenance. We don't charge overtime to repairs and maintenance expense. And the overtime hours times the estate time would be charged as direct labor. Yes, overtime hours and estate time wages would be treated as direct labor. Yes, but the first option is incorrect. The overtime hours times the overtime premium. The overtime hours times the overtime premium. The overtime hours times the overtime premium would be charged to MOH. Yes, this is the first part, that is charged to MOH, and overtime hours times the estate time wages be treated as direct labor. So this is the correct option, because overtime hours times the estate time wages would be treated as direct labor. Next, a computer company charges indirect manufacturing cost to a project at a fixed percentage of a cost pool. This project is covered by a cost plus government contract. Which of the following is an appropriate guideline for determining how costs are assigned to the cost pool? Cost pools are the accounts in which a variety of similar costs are accumulated, and we split that cost into separate pools like variable and fixed. So establish a separate pools for variable and fixed costs. Yes. Next, in traditional manufacturing operations, direct cost would normally include. So they are asking for direct cost. What is direct cost? Machine repairs in an automobile factory, that is indirect cost, which is manufacturing overhead. Electricity in an electronic plant, this is indirect cost. Wood in a furniture factory, this is direct cost because this is direct material. Commission paid to sales personnel is selling expense. So what's direct cost? Wood in a furniture factory. Next, in practice such as wood screws and glue used in the production of school desks and chairs would most likely be classified as. They are classified as what? This wood screws and glue. This one, wood screws and glue are very small and it's very hard. They are very small and they are very tiny. and it's very hard to trace them to the end product. So that's why we classify them as manufacturing overhead. We don't classify as direct labor, as a period cost, direct material. We classify wood, screws and glue as factory overhead. So this is the correct option. Next, which one of the following items would not be considered as manufacturing cost? Cream for an ice cream maker is a direct material. Sales commission for a car manufacturer. Sales commission for a car manufacturer is selling expense. Plant property taxes for an ice cream maker. This is manufacturing overhead, which is FOH. Tires for an automobile manufacturer. Tires for an automobile manufacturer is direct material. So let us see what is manufacturing cost. Manufacturing cost consists of direct material, direct labor, and we have MOH. So MOH consists of fixed overhead and variable overhead. Now let us see. Direct material is a manufacturing cost. Direct material, this is also direct material, right? Direct material is a manufacturing cost, and manufacturing fixed cost is a manufacturing cost which is fixed. So we are left with the selling expense, that is sales commission for a car manufacturer is a selling expense, is not a manufacturing cost. Next, a painting contractor maintains a job order cost system. Job costs are accumulated by tracking the actual cost of paint and other materials used in each job, as well as the actual cost of wages earned by the material on each job. In addition, overhead is applied to each job by using a predetermined rate based on the actual painter's wages. A painter earned 168. A painter earned 168 today by working on job 0845 job. And he earned what? He earned something, his wages, that is $168 on job 845. Now, so a painter earned 168 today by working on job 0845. In computing prime cost and conversion cost, so we need to compute the prime cost and conversion cost for job 845. How would the wages earned? How would the wages earned today by the painter be classified? So this is basically the direct labor because it's a wage. It's a direct labor. So they are asking the classification of prime cost and conversion cost. So prime cost is direct material plus direct labor, and conversion cost is direct labor plus manufacturing overhead. So direct labor we have in conversion cost here, and direct labor we have here. So the job, so this 168 comes under the prime cost as well as the conversion cost. So it's a component of both prime cost and conversion cost, yes. As a component of prime cost, yes, but not a component of conversion cost. No, it's a component of conversion cost. Direct labor is a component of conversion cost. As a component of conversion cost, yes. As not a component of prime cost, no, it's a component of prime cost as well. It's a component of neither prime cost. No, this is incorrect option. Next. All of the following should be considered manufacturing overhead cost by a book publisher except. All of the following would be considered manufacturing overhead. They're asking for manufacturing overhead cost by a book publisher. So let us understand what these are. So let us understand these all options. Depreciation on printing equipment is manufacturing overhead. Wages paid to production supervisor, that is manufacturing overhead. Fire insurance on printing facility, that is manufacturing overhead. Rent on warehouse containing finished books inventory is selling and admin expense. So all of the following would be considered manufacturing overhead costs. So depreciation on printing equipment is manufacturing overhead. Wages paid to the production supervisor is manufacturing overhead. Fire insurance on the printing facility is manufacturing overhead, but this is rent on warehouse containing the finished books inventory is not the manufacturing overhead. Is basically selling and admin expense. So let us understand one aspect of it, that is we have two types of warehouse. Warehouse that stores raw material, warehouse that stores finished goods. The warehouse that stores raw material is manufacturing overhead, and the warehouse that stores finished goods, that is selling and admin expense. So here we have rent on warehouse containing finished goods inventory. So that's why it is selling and admin expense. But if rent on warehouse containing the raw material cost, that would have been manufacturing overhead. Next, indirect and common costs often make up significant portion of the cost of a product. All of the following are reasons for indirect cost allocation to cost object except two. The corporate president salary. Indirect cost and common costs often make up a significant portion of the cost of a product. All of the following are reasons for indirect cost allocation to cost objects except two. Reduce total cost identified with products. Measure income and assets for external reporting purposes. So indirect and common costs often make up significant portion of the cost of a product. All of the following are reasons for indirect cost allocation to cost object except two. Measure income and assets for external reporting purposes. Justify cost for reimbursement purposes. Provide information for economic decision making. These are the reasons for cost allocation. They are the reason for cost allocation. What are the reasons for cost allocation? We have measured income and assets for external reporting purposes, justify cost for reimbursement purposes, and provide information for economic decision making. So this is not the reason for cost allocation, that is reduce total cost identified with the product. Next, which of the following is the best example of variable cost? The corporate president's salary is fixed. The cost of raw material is variable. Interest charge is fixed. Property taxes is fixed. So the variable cost they are asking for, the variable cost, and the variable cost is the cost of raw material. Next, which one of the following categories of cost is most likely not considered as a component of fixed factory overhead? Rent is fixed factory overhead. Property taxes is fixed factory overhead. Depreciation is fixed factory overhead. Power is not fixed. Power is variable. Next, a fixed cost that could be considered as a direct cost is a cost accountant salary when the cost objective is unit of product. They are very far away. One is cost accountant, one is the unit of product. They are very far away. So there is no relation between the cost accountant salary and unit of a product. The rental cost of a warehouse to store inventory when the cost objective is purchasing department. So the cost warehouse we have one, and purchasing, they are not interrelated with each other. A production supervisor salary when the cost objective is the production department. So a production supervisor salary is a fixed, as well as it can be traced to the production department, and it can be a direct cost because a production supervisor salary when the cost object is the production department, because he sits in the production department, so his salary is a direct cost, plus he gets a fixed amount of salary, that is the fixed cost. So that's why C is the correct option. Board of director fees with the cost objective is the marketing. Board of directors and the marketing department, they are different, they are not interrelated. So the option C is only, there is an interrelation with option C. Next, an airline is in the process of preparing a contribution margin income statement that will allow a detailed look at its variable cost and profitability of operations. Which one of the following cost combinations should be used to evaluate the variable cost per flight? They are asking to evaluate variable cost per flight of the company's flight along a specific route. Flight crew salary is fixed. Fuel is variable. Engine maintenance is fixed. Fuel is variable cost. Food service is variable. Airport landing fees is variable. Airplane depreciation is fixed. Baggage handling depends upon the number of passengers. It's not number of passengers. And the MCQ is asking for the cost per flight. Airline marketing is fixed. Communication system operation is fixed. Food service is variable. And ramp personnel is unrelated to the cost per flight. So the correct option is fuel, food service, and airport landing fees. This is the correct option.